The US Federal Reserve kept interest rate as expected, but keep its position open and wait for more data before deciding its next move. So far, the Fed funds futures market continues to price in at least 2 interest rate cuts for 2026 without any significant changes, and still expecting the fourth potential rate cut in this current interest rate cut cycle by the Fed to come into the summer months of this year, either June or July. The US dollar managed to take a breather after 4 consecutive sessions of decline and managed to stage a rebound yesterday due to US Treasury Secretary remarks in favor of a stronger dollar. Mixed performance in the major US stock indices yesterday. After the close of the US session last night, the major Nasdaq 100 managed to be the top performer, and after the earnings result released in today's early Asia session, which is i.e. after 5 a.m. Singapore time, mixed performance in Meta and as well as Microsoft that led to almost unchanged performance on the Nasdaq 100 E-mini futures. Gold continues to its red hot bullish run, cleared above the psychological level 5,500 and continues to rally in today's Asia session by extending its gains to almost 2% due to the backdrop of rising geopolitical risk premium coming up from the Middle East. And lastly, oil price continues to rally for the third consecutive session due to US President Trump trade indicating that Iran time is running out as US battleship approaches closer to the region surrounding Iran. Very good morning to all. Welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Thursday, the 29th of January 2026. All right. So as usual, before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right. So just to make sure that everything is good on the screen. Okay, just give me a couple of seconds to adjust the screen here. Okay, I believe that all is well in terms of the screen. All right, so great. So let's get started. What has taken shape yesterday? All right, so let's start with the US Federal Reserve meeting first over here and the various key takeaways that I want to share with you guys. All right, so yesterday the FOMC committee, as expected, kept rates unchanged over here. But what's stuck out, I mean, over here is that it's actually two descendant. So Miran descended in favor of a rate cut, right? So Miran, we have kind of a no surprise because Miran is put in a way that he's part of Trump's former administration team that Trump placed within the Federal Reserve Board of Governors. And ever since then, he's keep on in favor of a rate cut either by 25 basis point or even a larger cut of 50 basis point. But what's surprising over here was this Fed governor, Christopher Waller. So Christopher Waller is in the running to be the next Fed chairman. All right. So Christopher Waller tends to be on the neutrality side of the camp, and sometimes he was sounded slightly hawkish, kind of remarked the current elevated inflationary pressure that the US economy is still facing. But surprisingly, yesterday, he decided to dissent and in favor of a 25 basis point cut away from the rest of his colleague. So market speculation that this dissent could be more of a political game play by him to be in favor of US President Trump to be selected to be the next Fed chair over here. So based on the statement that was being issued as well yesterday, there's this upbeat tone about the economy. And what do you mean by upbeat tone over here? So yes, so basically the post-meeting statement indicated that policymakers now see the risk to the employment and inflation mandates as balanced, where many last year has been more concerned about the labor market over here. So what it means over here is that right now the members tends to see some improvement in the labor market, and inflation kind of continues to remains on the high side, because still remember that inflation, you look at various metrics, either the core PCE or the CPI data, both of them are still hovering between 2.4% to 2.8%. That is way above the long-term inflation target of 2% as imposed by the Fed. So overall, it's more like a kind of a wait and see approach as being played out by Fed Chair press conference as well. So the market reaction was muted over here. So overall, if you look at the US stock market, the S&P 500 closed almost unchanged after briefly piercing above 7K for the first time. All right. So if you look at the CME Fed Watch 2 over here, let's go to the current pricing by the Fed Funds futures traders for the next next meeting, which is in March, the 18th of March over here. So overall, what we could see over here is that the target probability still remains quite high for the Fed to stand pat to maintain the rate at 3.5% to 3.75% as of it is right now. So rather high, close to 90%, that the market participants, based on the latest data they are gathering, and also based on the latest, we call it FOMC post-meeting statement and Fed Chair Powell press conference in today's early Asia session, which is at 3:30 a.m. Singapore time to about 4:30 a.m. Singapore time. Market participants are still not expecting the Fed to move in March. And if you look at the aggregated tab over here, all right, over at the aggregated tab, the higher probability will continues to come into the summer months of this year, which either in June or July. So 17th of June, FOMC meeting, market is assigning a 75% chance that the Fed will engineer the fourth interest rate cut in this ongoing current interest rate cut cycle to bring it down to 3.25% to 3.5%, and a higher chance of 93% probability on the 29th of July FOMC meeting. And thereafter, market participants expecting the fourth potential interest rate cut to come in the October FOMC meeting, which is the 28th of October FOMC meeting, to bring the Fed funds rate down to 3% to 3.25%. So that's 84% chance over here. So net overall, by the time the last meeting of this year, which is on the 9th of December, a 9% chance that the market participants as a whole will expect the Fed funds rate to be at 3% to 3.25%. So that is continues to imply a minimum of at least 2 interest rate cut for this year, despite yesterday's so-called this kind of a balanced approach that Fed Chair Powell play out. But market participants, why they are still expecting a 2 interest rate cut? Because potentially the next Fed Chair will likely to be a much more dovish guy over here. And based on it seems to us that whatever comes into the picture, the next Fed chair will tend to be skewing towards the White House administration, we call it preference, after Christopher Weller, which is one of the potential candidate of the next up and coming Fed chair, decided to switch to the dovish camp, despite the fact that in the last few weeks or his remarks, he tends to be much more neutral, and sometimes he sounded slightly more hawkish over here. Okay, so that's for the FOMC take. So based on that over here is that we see the dollar rose yesterday, right? So the dollar index, okay, rose, right, after 4 consecutive session of decline, 1, 2, 3, 4 over here. So it actually went up by 0.54% yesterday, retested the former range, major range resistance, now turns into a pullback support at 96.4 over here. And very interestingly, right now, as we are speaking in today's Asia session, the dollar index did a intraday bearish reaction of this 96.4 and traded much lower, down negative 0.19%, 0.19% as we are speaking right now at 11:12 a.m. Singapore time. And the reason why the dollar spiked up yesterday is two things. One will be the dollar yen. We are shared with you all yesterday in yesterday's daily dose, where the dollar yen could shape a counter trend rebound due to various technical factors in terms of Elliott wave and in terms of the momentum, bearish momentum that starts to ease off on the hourly RSI. And it got reinforced by this particular public speech that is being made by the US Treasury Secretary. Why US Treasury Secretary speech is very important? Because the US Treasury is kind of in charge of the dollar policy in the United States, all right, over here. So Treasury Secretary Scott Bessent said that the US always has a strong dollar policy over here. That actually goes against prior day President Trump's remark regarding that he's pretty much pleased with a weaker US dollar. And also Bessent stated that the US is absolutely not intervening in the currency market to sell the dollar against the yen. So still recall that the dollar yen declined dramatically since last Friday due to ongoing fears of a potential joint intervention between US and Japan. And yesterday, surprisingly, US Treasury Secretary Bessent kind of play off this fear by making this remark stating that they are absolutely not intervening in the currency market to sell the dollar. So that came on the backdrop where the dollar yen hit a key support, short-term support yesterday, where we share with you in yesterday's early Asia session before the bounce takes shape over here. Right. So then we talk about the state of the US stock market. So the state of US market was rather mixed. So the SPX was almost unchanged, almost negative 0.01%. The Nasdaq 100 managed to outperform 0.32% due to anticipation of this up and coming mega cap technology stocks earnings. Later I'll share more about that, Meta and Microsoft. And that was yesterday's US session. All right. So the Dow Jones Industrial Average was almost unchanged as well, negative 0.2%. And the Russell 2000 was the worst hit because of the remark made by Fed Chair Powell, stating that they're going to be on the wait and see approach in the next two meetings for March and April. So that kind of suck out the current year-to-date outperformance of the Russell 2000. Down negative 0.5% yesterday, being the worst performer among the major US stock indices, given the fact that most Russell 2000 component stocks or company kind of rely on a financial leverage to kind of to juice up their bottom line. Okay, so definitely not so dovish Fed as portrayed by Fed Chair yesterday, kind of suck out the bullish momentum that was being played out in the Russell 2000 since the start of this year. So given the fact that right now the Nasdaq 100 is also trading almost unchanged in the futures session, okay, kind of yo-yoing right now. So only a positive gain of 0.07%. So this is the Nasdaq 100 E-mini future. So what causes the price to have this wild swing is related to the two mega cap technology stocks ex-post earnings share price reaction. So which is Meta Platforms and Microsoft. So Meta Platforms actually jumped by 10% over here. So for those who have seen our chart of the week, which I published out on Monday on OANDA Asia Pacific Traders tab blog, I do mention that Meta Platform is one of the stock to take a look of, and it actually has this chart of the day feature as well because of this encouraging emerging potential technical configuration that is showing potential outperformance against the S&P 500, which surprisingly it did after the ex-post share price reaction to it. So Meta shares jumped 10%. So this 10% is actually the after hours trading session over here. So we should see very interestingly when the US stock market opened today at 10 p.m. Singapore time, how the share price will likely to be positively react to it as well. So Meta share jumped 10% in the after hours trading session. So this is because of it reported fourth quarter earnings on Wednesday that top estimate, and most importantly, it gives a rather rosy Q1 earning forecast for this quarter, coming in the range of US dollar 53.5 billion to 56.5 billion, ahead of analyst estimate of 51.41 billion, kind of giving a hint that the heavy capex investment into AI initiative may start to see some fruit in Q1 2026 this year. However, on the flip side, Microsoft share tumbled by 7% in the after hours trading session, despite the fact that they managed to meet expectation in terms of bottom line and revenue. But however, one of their crown jewel business unit, which is the Azure cloud computing unit, posted a 38% revenue gain, which is only just in line on par with analyst expectation. It didn't actually surpass greatly, so that actually causes Microsoft, pardon me, share to react negatively in the after hours trading session, down by -7%. So given that both of them are heavyweights in the Nasdaq 100 Composite index, so what we could see is that we now start to see a kind of a mixed, almost unchanged reaction on the Nasdaq 100 E-mini futures, as kind of a metal performance of 10% gain in the after hours kind of being knocked off by the -7% gain that's being seen on the Microsoft. And despite the fact that yes, both of them are heavyweights, but Microsoft actually ranked number 3 on the Nasdaq 100 in terms of market weight cap, whereas Metal Platforms is ranked, I think, 7 or 8 over here in the Nasdaq 100 market weightage cap ranking over here. All right, so that is for the US stock market over here. So the reason why gold and oil rallied as we are speaking right now and extending its gains as well is due to geopolitical risk premium coming out from US President Trump himself, stating that he wants Iran time is running out as battleships enter the region over here. So Trump actually going to want Iran to make a nuclear deal with US or face military strikes, increasing pressure of the regime change and propelling oil prices higher, together with gold price as well, that as gold price top above our expectation of $5,500 per ounce as expected, and continues to extend in gains by around 2% in today's Asia session. All right, so now let's have a quick look at the performance of the FX market on the intraday basis. So this is a 5-day rolling performance of the US dollar against other major currency as of we are speaking right now. So overall, the broad-based trend is still continues on the downside based on this 5-day rolling performance of the US dollar against other major currency. So the weakest is still the dollar yen, followed by the dollar Aussie over here. So later I'll touch on the configuration of the dollar yen. So from a technical perspective, the dollar yen seems it did that corrective bounce as expected yesterday, hit our first resistance level at around the 15340 level before inching down after the session where Fed Chair Powell ended his press conference over here. But there could still some signs that it could have some residual push up before another down leg take shape over here. So later I'll touch more on the intraday technical outlook over here on the dollar yen. So let's very quickly take a look at the performance of the Asia market. So Asia market, a bit of mixed performance right now. You see the Nikkei 225 doing a bit of profit taking over here, down by -0.16%. The Hang Seng Index continues to shape gain, now trading near the session high, up by 0.3% after yesterday's daily close and a bullish breakout above a key major resistance level, which we keep on highlighting, 27,500 level. All right, so now it's trading at 27,909, and going into the China A shares market, a bit of profit taking, almost unchanged. I would say the broader China CSI 300 index, which comprises of the big blue chip stocks in China stock market, both on the Shenzhen and the Shanghai stock exchanges, down marginally -0.1%. The much more narrower China A50 index, which is trading almost unchanged at -0.04% over here. And the rest of other Asia Pacific market, the Australia ASX 200 is down -0.54%. The red hot Kospi 200 continues to surge to potentially another all-time high, which is up 0.8% over here. Our local Singapore Straits Times Index is almost marginally unchanged right now, -0.07%. So despite the Fed balanced approach right now to adopt a wait and see approach, indicating that they may not do an interest rate cut very likely in March and April. that doesn't kind of created a throughout the board negative risk off session in the major US stock indices, and as well as the Asia Pacific stock market over here. So potentially the bulls are still in control, at least in the short to medium term perspective. All right. So with that, now let us now jump straight into the technical intraday technical outlook segment for the for all the broad-based cross asset classes. All right. So before I start, let me expand my screen, all right, so that you guys could have a better view. All right. So let us start with the FX market. All right. Expand the screen. Okay, so let us start with the euro dollar over here. So still remember that the euro dollar yesterday, we do have a rather tightened pivotal support level, which is at 119.10, 118.90. That I do warn that there could be a sign of a minor pullback, and the minor pullback indeed take shape. And what we see is that it bounces off exactly at our adjusted pivotal support level. So indeed that this is a clear short-term pivotal support level in order to maintain this ongoing short-term bullish trend that is taking shape and that is still evolving potentially in the euro dollar. So no change. This is indeed the pivotal support that to maintain our ongoing bullish bias on the euro dollar on the intraday basis for today as well. 119.10, 118.90. First resistance level to surpass will be the minor swing high that was formed on Tuesday before the FOMC meeting, and as well as before that so-called speech by Treasury Secretary Bissett to actually kind of calm down the dollar bears. All right, so that will be the swing high at 2040. A clearance above 2040 potentially expose the next intermediate resistance at 121.30, 121.70, which is a bunch of Fibo extension cluster level. And also, if we go back in time on the 4-hour on the daily time frame, that 121.30 is actually the kind of the congestion area over here. It previously hit support break and negative reaction before staging that week to multi-month decline previously in June 2021. All right, 2021. So that was close to about 5 years back, 4.5 years back. So now back to the hourly chart. Right. So however, the price action can maintain above 118.90, 118.90, 118.90, and the hourly close below it, then today's direct bullish bias view or / recovery view will be invalidated to see the extension of another leg of minor corrective decline unfolding, exposing the next near-term support zone or support levels at 118.33, 118 figure, 117.90 level. All right. So one price action approaches this level over here, 118.33, 118 figure / 117.90. I'll be still on the lookout for a bullish reversal candlestick or any bullish condition on the momentum indicator, both on the hourly basis and as well as a 15-minute basis, to be on the lookout for a bullish potential setup. Again, why? Because the longer time frame, medium-term trend continues to remain bullish, given that it continues to trade above the 20 and the 50-day moving average. All right, so that's for the euro dollar. Next up, the sterling dollar, where the pound is against the USD, continues to bounce as expected, hitting our first support level at 137.50 and the pivotal support will be at 137.15, 136.80 as highlighted yesterday. So given that it didn't clear above the Tuesday minor swing high area at 138.48, I do not want to tighten my pivotal support level to be so tight at the 137.50 level. So instead, I will remain the same pivotal support zone that we highlighted yesterday, 137.15, 136.80, to maintain my ongoing bullish bias on the sterling pound. Clearance above 138.48 on the hourly close above it. Thereafter, I will tighten my pivotal support to 137.50. So next resistance level to watch will be at 139.10, 139.38, followed by 139.75, which is a bunch of Fibo extension cluster level. And if you do this ongoing bullish acceleration phase, as you could see, is now evolving within this steepening minor ascending channel over here. Okay, that also coincides with the upper limit of this steepened minor ascending channel drawn from the low of 22nd of January. All right, only a bearish, however, a bearish breakdown below 36.80 1.3680, and hourly close below it will invalidate today's direct bullish buyer's view and see another round of minor corrective decline sequence unfolding towards the next support zone at 135.88, 135.68, maximum 135 figure level. So once price action reacted towards this zone over here, 135.88 / 135.68, followed by 135 figure maximum, I'll be still on the lookout for a bullish reversal setup criteria. Why? Because the price action of the sterling pound continues to trade above the 20-day moving average and the 50-day moving average, as well as the 200-day moving average as well, indicating that the medium-term uptrend phase on the sterling pound continues to remain intact on the sterling dollar. Right. Next will be the Asia Pacific currency, starting with the Aussie dollar over here. Let me expand my screen. So what you could see, the Aussie dollar, okay, now continues to pierce up over here. So initially, I wanted to have a bearish play of it, but given that this breakout over here at 70, 65, 70, 70, and also the RSI also starts to break out as well as we are speaking above this parallel ascending trend line, negating that bearish divergence of a movement over here. So the bearish divergence movement has been negated over here with this bullish breakout of this parallel descending trend line resistance. So that being said, over here is that we will continue to maintain that bullish bias view to respect this ongoing bullish momentum that is still playing out on the Aussie dollar over here, on the Australian dollar. Right, so this level is breaking out right now. So what I'm going to do now is I will actually tighten my pivotal support all the way up to 69.80 over here, which is yesterday's US session low, given that bullish breakout that's being seen on the hourly RSI. Okay, so this is 69.80. Right, so let me highlight it, extend it. Okay, let me put it in writing. 0.6980. So this is the ST pivot. Okay. Okay, using a upward adjusted pivotal support now at 69.80, maintain the ongoing bullish bias on the Aussie dollar in this potential minor bullish acceleration phase. Above 70.70, potentially seek out the next intermediate resistance at 71.40, followed by 71.75. Fibo extension cluster. However, a bearish breakdown below 69.80 and the hourly close below it will invalidate this direct bullish push-up scenario and see a minor corrective decline sequence unfolding towards the next intermediate support at 69.40, maximum 69.07, 68.90, which is the lower boundary of this minor ascending channel that is drawn from the low of 19th of January. And if price action continues to drift down towards this zone over here, 69.40 and 69.07, 68.90, I'll be still on the lookout for a bullish intraday sell-up condition, given the fact that price action continues to trade firmly above the 20-day and the 50-day moving average, indicating that the longer term / medium term picture continues to be constructively bullish for the Aussie dollar. All right, next up will be the very interesting dollar yen over here. So the dollar yen, yesterday we have a bullish bias. It hit our first resistance zone at around the 53.70, printed a high of 54.05 before trading downwards over here. All right, it drifted downwards. So it seems to us that there could still be a residual push up over here, given the fact that the hourly RSI hasn't hit the overbought level yet, and it continues to print a higher high over here. So what you could see over here is that I will have a rather tight short-term pivotal support for today to play out that potential residual movement for that micro wave 4 to end at that 54.73 level, maximum 155.35. 155/60, which is the gap down that's being formed on this Monday. So using a tightened short-term pivotal support at 15238, which is yesterday US session low, continue to maintain this potential dead cat bounce scenario, a minor micro one, before the bearish impulsive downward sequence unfold again. So it's more like a residual potential push up above 154.05, yesterday US session high, potentially take us up to 154.73. and the 151.73 is also your typical wave 4 38.2% Fibo retracement of that previous impulsive wave 3 down move over here as well. Let me push it to the right side of things so that you guys could see clearer. Okay, so this the label is the left, so it's the right. Yeah, over here. So 0.38, 38.2%, a typical wave 4 corrective rebound target. All right, over here. And also coincide graphically with the minor swing high area of 27th of January where it plunges downwards. All right. So, however, if price action don't goes up as intended and starts to break down below 152.38, then potentially this minor dead cat bounce scenario would have ended and the bearish impulsive downward sequence continue towards 151.9, 151, pardon me, okay, 151.9, 151.6, breaking down below 151.60 exposes the next near-term support level at 150.50 next. So that's for the dollar yen. All right, so that sum up the intraday technical outlook on all the 4 major dollar pair. So let us now take a look at the major stock indices, starting with the Hong Kong 33 over here. So bear in mind that Hong Kong 33 managed to break out above 27,500, which is a major resistance level. So before we jump straight into the adjusted level, let us take a look at why is it a major resistance again for those who first time joining me. So this here clearly has been taken out on the daily basis. All right, so let's put this level in green for now. All right, so why this level is important? Because it's a 8-year-old, this 8-year-old resistance on the Hong Kong 33 representing the Hang Seng Index, because it's a major long-term circular descending trend line that kept previous multi-month rallies in check since the current all-time high of 33,495 that was printed way back on 29th of January 2018. So that is a 8-year plus of major resistance. So yesterday we have a daily close above it. So if we have a weekly close above it, because we still need to have a weekly close because this is being derived on a weekly chart. Weekly close above it by Friday at above 27,500. So that would cement a potential transition of the Hong Kong 33 representing the Hang Seng Index to transform into a potential major / multi-month bullish uptrend phase. All right, so that's for the longer term approach. So now with a shorter term intraday basis, given that now he has cleared above our first resistance level at 27,740. So now this become a first intermediate support level to watch on the pullback level. I could now tighten my pivotal support exactly to 27,500, which yesterday during the US session, it tested and shaped that minor V-shaped recovery right exactly it. So indicating that it's indeed some form of pivotal level that attracted the boost to step in. All right, so this will be a 27,500. Let me put it in writing. ST pivot for today. Right, so this will be the next support level to watch. Okay, let me tidy it up. Given the latest price movement that we are seeing right now at 11:36 a.m. Singapore time, right? So now with a adjusted tighten pivotal support level now at the key former major resistance level that has been taken out on a daily basis. So using 27,500 as my short-term pivotal support for today, or the Hong Kong 33 representing the Hang Seng Index continues to have that bullish bias. Next two intermediate resistance level to watch, 28,177, followed by 28,438, which is a Fibo extension level, and 28,438 if you go back in time over here on the daily time frame. Okay, that actually coincided with this congestion area here of 17th of June 2021 and 5th of July 2021 over here. So now back to the hourly time frame. So if we have a bearish breakdown and an hourly close below 27,500 again, so that could indicate a failure bullish breakout and see another round of choppy minor corrective decline sequence unfolding to expose the next two near-term support level in first step at 27,175, followed by 26,922. Right, so that's for the Hong Kong 33. Next up will be the Japan 225, representing the Nikkei 225. So the Japan 225 push up as expected, hit the minor swing high area of 22nd of January before shaping a pullback over here. So right now, we will actually tighten my pivotal support level to close to the 20-day moving average, and as well as the minor swing low that was printed out on Tuesday, okay, at 52,730. So continue to maintain that bullish bias as price action continues to maintain above the rising 20-day moving average. 52,730 will be my adjusted upward short-term pivotal support for today. Still maintain that bullish bias. First resistance level to clear will be today's Asia session high at 54,155. Above it, potentially seek out a retest around the current all-time high area at 54,575 next over here. So only a bearish breakdown below 52,730 and hourly close below it will invalidate today's bullish bias view to see a choppy minor corrective decline sequence to retest the 21st of January minor swing low area at 52,060, 51,837. Okay, next up will be the Germany 30, representing the German DAX. So German 30 continues to trade within the sideways range, still below the 20-day moving average and still below the former medium-term ascending support from the low of 21st of November last year. Now turns into a pullback resistance at around 25,081. So given the fact that it managed to bounce off from our first support level at 24,750 level, we're going to maintain a mild bullish bias scenario on the Germany 30, using the pivotal support level at 24,480/24,375, given that it hasn't broken up above the 25,081 level. So unless we see a clear bullish breakout and an hourly close above 25,081 level, then I could tighten my pivotal support level to 24,750. Above 25,081, potentially seek out 25,260, followed by the current all-time high area at 25,505. Only a bearish breakdown below 24,375 will invalidate the recovery scenario to see the corrective decline sequence unfolding further towards the downside, towards 24,250, followed by 23,885, which confluence with the key 200-day moving average. So that's for the Germany 30. Next up, the major US stock indices, starting with the US Wall Street 30, that's representing the Dow Jones Industrial Average. So the US Wall Street 30 continues to churn sideways in a very tight range yesterday, still holding above the lower limit of our pivotal support zone at 49,030, 48,918 over here. So given the fact that it's still holding above this level, I'll still continue to maintain a mild bullish bias. And given the fact that we have similar low on the price action, but the RSI now starts to shape a higher low, indicating a bullish divergence has been formed as well. So still maintaining that bullish bias, a mild one, given that it can't clear above our first resistance level at 49,263. So this will be my first resistance level for today. Clearance above this 49,263 will increase the probability of this bullish bias to retest at least its current all-time high area at 49,606 in the next step over here. However, a bearish breakdown below 48,918 and an hourly close below it will see another round of choppy minor corrective decline sequence unfolding towards the next near-term support level at 48,770, 48,650, and maximum potentially 48,480/48,340. That also confluence with the rising 50-day moving average. So that's for the US Wall Street 30. Next will be the SPX 500. So the SPX 500 briefly broke above the 7,005 level, which is the intraday high that was printed on 13th of January. Also the current intraday all-time high based on our SPX 500 CFD index. Then thereafter, it traded downwards, managed to form support and stay a bounce close to the lower limit of this minor ascending channel drawn from the low of 21st of January, and also our Titan pivotal support that we have yesterday at 6945. So no change in terms of price action, still on the lookout for a bullish recovery. So yesterday I do mention that there could be a risk of a pullback. The pullback takes shape. So pullback now bouncing off from our pivotal support. That means right now we are in line of a start of a new bullish impulsive upmove sequence. So using 6,945 as my short-term pivotal support level, maintain that bullish bias. Above 7,114 will potentially seek out the next intermediate resistance at 7,038, 7,045, which is a bunch of Fibo extension cluster level, before 7,074, which is the 1.382 Fibo extension from the low of 21st of January, and upper limit of this minor ascending channel as well. However, a bearish breakdown below 6,045 potentially will see another round of minor corrective decline sequence unfolding, targeting 6,923, which is the 20-day moving average. A breakdown below it exposes further weakness, potentially towards 6,877, 6,860, which confluence with the rising 50-day moving average. Lastly will be the mega technology centric Nasdaq 100. So Nasdaq 100 bounced off as expected, right exactly at our first pivotal support level, first intermediate support level at 25,954, slightly above our pivotal support zone at 25,830, 25,760, which is the stubborn range resistance that was formed previously on the early part of December last year. So given that it hasn't cleared above our the all-time high area at 26,290, we do not want to tighten my pivotal support level to be so tight at 25,954, just in case of any whipsaw on the intraday basis. So still maintain my pivotal support level at 25,830, 25,760 to maintain this ongoing bullish reversal scenario that may take shape right now, given the strong bounce that's being seen right now in today's Asia session, right at the first support level at 25,954. Still maintain that bullish bias above the all-time high level at 26,290, potentially exposes the next intermediate resistance level at 26,430, 26,450, which is a Fibo extension level at 1.382% from the low of 21st of Jan, and also the upper limit of this ongoing minor ascending channel drawn from the low of 21st of Jan as well. However, a bearish breakdown below 25,760 will invalidate today's bullish reversal scenario and see another round of minor corrective decline sequence unfolding, exposing the next near-term support level at 25,624, 25,508, maximum potentially 25,350, all confluence with the area of the 20-day and the 50-day moving average that is turning upwards right now. Right, so that sum up the intraday outlook on all the major stock indices globally. So let us now take a look at the commodities asset classes, starting with the red hot gold XAU/USD. So gold XAU/USD cleared above our resistance level at 5,549, 5,483 level. So now this will become a pullback level to watch. Very interestingly, price action during the intraday session right now at the 9 a.m. mark Singapore time as we are speaking, 11:45 a.m. managed to find some form of support as we are trading right now in the last 2 hours. So given that this support level is rather tight, I do not want to put my pivotal support level exactly at 5,549. I put it slightly lower below this minor congestion area here between Wednesday 5 p.m. Singapore time all the way up to Thursday 4 a.m. Singapore time before it staged that bullish breakout from this minor congestion area. Now turns into a critical pullback support at 5,312, 5,227. And if you do a Fibo retracement of this ongoing steep impulsive up move sequence from the low of 22nd of January all the way up to today's Asia session high over here. Let me, come on, what the hell is this? Okay, so let me put it to the left side so that you guys could see. So that also confluence with the 23% Fibo retracement and the 38% Fibo retracement as well, 38.2% Fibo retracement. So using a tightened upward pivotal support level at 5,312, 5,227, still maintain that ongoing bullish bias for this bullish acceleration movement to continue, potentially on gold XAU/USD. Next two resistance level to watch, 5,677, 5,703, followed by 5,923, which is a bunch of Fibo extension cluster level. Only a bearish breakdown and hourly close below 5,227 will invalidate this direct bullish bias push up to see the start of a minor corrective decline sequence unfolding towards this three support level, 5,094, 5,000 level, the psychological level, and as well as the pullback line of this former minor ascending channel. Resistance now turns into a pullback support in light green, maximum 4,888 level over here. So that's what we go XAU/USD, still maintaining that bullish acceleration movement with a tightened short-term pivotal support at 5,312, 5,227 for today. So that's for gold XAU/USD. Lastly will be the West Texas crude oil. So the West Texas crude oil cleared above our resistance level at 63.44 over here. So the RSI continues to showing no signs of an exhaustion over here. There's no bearish divergence. Price action continues to show a higher high and continues a series of higher low, maintaining above a parallel support above the 50 level mark, indicating bullish momentum remains intact. So with that, I will have a Titan short-term pivotal support level for today, which is yesterday's European session low, where it managed to bounce above the 200-day moving average. Now turns around a pullback support level at 62.12 level over here. 62.12. So using a slightly adjusted upward pivotal support at 62.12, maintain that bullish bias on West Texas oil in any pullback. Two key resistance level to watch for today will be 64.50 followed by 65.30, which is a one-time Fibo extension from the low of 7th of Jan, and also as the upper limit of this minor ascending channel that is still forming up right now. Only a bearish breakdown below 62.12 and hourly close below it will negate today's bullish tone to see a minor corrective pullback sliding towards the 20-day moving average and also towards the lower limit of this minor ascending channel, with two support level to watch, 61.2 followed by 60.10, which is confluence with the 20-day moving average as well. So that's for the West Texas oil. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? All right, so very quickly, let me open up the calendar for you guys to take a look. All right, so today will be the Thursday, the 29th of January over here. Okay, so during the Asia session at 1 p.m. Singapore time, we have Japan consumer confidence for January. So market participants is expecting a slight uptick to 38 from 37.2. So that could potentially influence the dollar yen and the yen crosses, and as well as the Nikkei 225/Japan 225 CFD index over here. Then as we head into the European session, one ECB official speaking at 8 p.m. Singapore time, ECB donatory that will potentially impact the euro dollar and the euro crosses. And as we head into the US session, this is more like a tier 2 job data, kind of noisy because it's a weekly basis. So at 9:30 p.m. Singapore time, we have the weekly initial jobless claim for the week of 24th of January. So market is expecting a slight uptick from 200K to 205K. So that could potentially influence the major dollar pair and in some form the major stock indices over here. Then at 10:30 p.m. Singapore time, we have another ECB official support launch speaking. Then thereafter will be a rather quiet US session. And bearing in mind that today we have another mega cap technology stock reporting after the close of the US session. Okay, let me take you up the calendar. Okay, over here, which is nonetheless Apple. All right, so let it wait for a while to load. All right, so let me put it up 3-star. Okay, so today Thursday will be Apple. So Apple will report its earnings after the close of the US session, and followed by two also a very important financial company, Visa and MasterCard. So Visa and MasterCard will kind of potentially influence the S&P 500 and in some form the Dow Jones Industrial Average, given that the financial sector has a heavy weightage in the Dow Jones Industrial Average. So Visa will report its Q4 earnings PM, that means after the close of the US session today, whereas MasterCard will report the earnings before the start of the US session today. So it tends to be around like 7 p.m. to 8 p.m. Singapore time usually. So that will do keep a lookout on that. That could influence these three we call it key significant earnings out from the US stock market, Apple, Visa, Master, who could potentially influence the movement of the major stock indices today, primarily on the S&P 500, the Dow Jones, as well as the Nasdaq 100, especially on Apple, which is more on the Nasdaq 100, given its heavy weightage on this tech-centric Nasdaq 100. So that will come after the close of the US session today. All right, so that sums up today's Daily Dose of Market Insight. I'm Kelvin here, signing off. I wish you all a great day ahead and a restful weekend, as I will be on a medical checkup tomorrow morning. So there'll be no Daily Dose tomorrow morning, and Daily Dose was resumed again on next Monday. So I wish you guys a restful weekend, and we shall speak again on next Monday. Thank you.